Hey guys, this is John D. Relay, Head of Revenue Management Education at Wheelhouse. And today we're going to dive into Galveston and take a look at some market data. February is coming up, and we have a live deep dive workshop where we're going to look into tons of market data across the Texas coast and kind of see what's going on and get ready for a great booking season this year. So today we'll start out by just looking at a few trends that I have here in our dynamic set for Galveston. I built this using Wheelhouse's dynamic set tool. Pretty easily, basically grabbed a whole bunch of listings that had history of performance last year, built a set of about 971 listings, and we're going to go ahead and dive into some trends. First trend I want to look at with you guys is occupancy and RevPARs. So as you can see, obviously we have a high season coming up in June, July, and May. Being January, we're probably starting to hit that booking window at the very beginning. Looking at a lot of market data in Galveston and other Texas markets, I actually find that the booking windows tend to be a little shorter than other areas. But we can already see that we're off to a pretty decent start, although there is some attrition occurring. So in this set, which has a history of performance, January, generally a low occupancy time, but really losing some ground year over year. When we look forward into February and March, we have a long way to go. So I think that should be a signal to everyone. If you were starting to see some attrition in January, February as a market isn't quite on pace as well. And so it's probably going to be pretty competitive through Q1. Now, that being said, we do see some early booking all the way out in June and July. That's a good sign. Hopefully, we'll be able to see that the production continues high there. Jumping into a little deeper dive, we can go ahead and take a look at what this looks like at a daily level. First thing to note is we can see that attrition in January, and I think what's particularly notable is while we do have some attrition on weekends, really big attrition on weekdays, and that should be a signal to everyone. If we're not pricing our weekdays to be reasonable, we might lose some ground here. Additionally, if you're maintaining high length of stays, that could be a problem. Now, obviously, January, February are not going to be super high times. And we do see quite a lot of demand, particularly on weekends, but it does kind of tell you that the focus should be on weekends. You need to make sure that your rate is competitive, and you want to try to find ways to fill as many extra room nights as possible, whether that's long-term stay discounts, whether it's setting your rates to target 7, 14, or even 30-night stays, and maybe coming up with some just creative, novel things. If people aren't coming in for the big long stays the same way they were, if it's really competitive in the short term, really try organizing your pricing for that 7, 10, 14 night period. I think that's kind of an underserved market. And as I've looked across a number of markets around the Gulf in Florida, Alabama, and Texas, we see that there might be some indications that could be a successful strategy. Less so this year because we're getting towards the end of these first 2 months already. But as we think forward into next year and how we can improve this performance, I think that's going to be pretty key. Looking forward into the spring, we can already see some date ranges that are starting to spike up and show us where the demand is. Now, last year, demand seemed pretty good across many of the spring weekends. Obviously, we had a few weekends that were lower, but once we hit March, there's definitely a level up in occupancy. We're hoping to see that again this year. We're already seeing that kind of like March 16th to 19th date range is packing on occupancy. We're also seeing that the April 5th date range, and even as far out as April 26th, 27th is starting to pack on occupancy. Now, those are good indicators. If you're making sales on those dates, if you're pacing ahead, might be some opportunities to push. Few things to notice is this shape is quite a bit different. I think that's really interesting. For one, it seems like the peak is a little lower and a little offset, but we do have a solid base of business both before and after. So really pay attention to this whole early March time period because it looks like it's going to actualize a little bit different than it did year over year. And also important to note, weekdays continue to be pretty low occupancy here. So any ideas you can use to drive weekday occupancy is going to be a net benefit for your portfolio. This might include, again, those long-term stay discounts. Something else to keep in mind is if you are holding weekday rates high, you may want to look at how your portfolio is actualizing and bring those rates down. Really give yourself the best opportunity to book throughout the year, even if the rate feels low, because at the end of the day, if you have a bunch of properties vacant, then they're not helping you out. Now, again, this shape is a little odd. It does indicate that there is some weekday booking around this time period. So be real careful about what you do in this kind of like early to mid-March zone. Last thing I want to take a look at today is just the asking rates in the area. So asking rates are going to be the rates that are posted on OTAs and are publicly available. And we do have some analytics to see how this market area is pricing. In green, I have last year, and in pink, I have this year. Interesting to note is you can see that rates are generally a little higher than last year, starting about the end of February. So coming through January, we see both the median and the average are pretty in line with last year. But as we start to get a little further out into the year, those start to deviate. Not huge deviations. Interesting, that time period that's actually starting to book quite a bit. The average and the median are very close to last year. So that should be an indicator that if you're really pushing your rates up, that may not be a winning strategy, because January we had some rate attrition, even though the rates are pretty similar. The area that's booking the most on the calendar is this area where this year's rates are pretty in line with last year's. These other areas aren't quite pacing the way we would like to see necessarily across the whole market, but that's easily corrected. You know, if you're seeing that this opportunity exists, that maybe things are pacing a little bit slower than you would like, or maybe you want to get ahead because you anticipate things may be more difficult in the short term, there's a lot of room here. And there's a little bit of evidence showing that if we're more in line with last year, we're going to put ourselves in a big position. For your portfolio, that means, you know, you have some opportunities to adjust rate. You can really segment this down. You don't have to do it for all of your properties. If you go ahead and look at low performers last year, you could use those as testers. And just be real on top of it. These rate differences year over year are not that big. I've looked at some other markets across the Gulf, and some markets have really big differences in their year over year rates. It's a lot tighter here in Galveston, kind of indicating that people are maybe expecting things to be a little bit more competitive. But the fact of the matter is the rates are still going up a little bit, and it's up to you to respond if the consumer is, whether or not the consumer is responding to it. Thank you for your time. I hope these insights were helpful, just to give you an idea of how January and February are starting to shape up as we enter the booking window for spring and summer. In February, we have an event where we're going to do a bunch of deep dives into data together across Texas markets. Would love to see you there, and would love to have you ask questions so that we can really dive deep into the most important segments and important neighborhoods in your market. Thank you.